students, welcome back. This is Dr. Mercado speaking. This lecture is on my course Accounting 1329, Payroll and Business Tax Accounting. And during this week, we are going to continue covering the content in Chapter 5, which deals with unemployment compensation. By now, this is the second week we're covering Chapter 5. By now, you should have already read the entire chapter. If you have not done so already, please make sure that you do so you can understand what is being covered. There's a lot of information, a lot of exclusions, a lot of inclusions, a lot of things that are covered, not covered under unemployment compensation. So we need to be familiar with the information provided. Okay, so before you try anything, make sure that you do read and make sure that you are aware of your assignment deadlines so you don't miss them. Okay, so the problem, I'm going to dive in right into problem solving. This is the second week we're covering, like I mentioned earlier. So by now we should be familiar with some of the content in Chapter 5. So I'm going to dive into the first problem, which is problem 5-7A. Okay, you'll be seeing this on your homework. So this problem deals with the company transferring an employee from one company to another company in two separate states. Okay, so it says on April of the current year, Freeman Steel Company transferred Herb Porter from its factory in Nebraska to its plant in Michigan. The company sued at tax rates based on its experience ratings are 3.2 in Nebraska and 3.8 in Michigan. Both states base the tax on the first $9,000 of each employee's earnings. Okay, so the state unemployment tax is on the first $9,000 of each employee's earnings. There's two different rates for the two different states. Okay, this year Freeman Steel Company paid Herb Porter wages of $20,900. 2,800 of those 20,900 were paid in Nebraska, and the remainder were paid in Michigan. We are being asked to compute the SUTA tax the company must pay to Nebraska on Porter's wages, the SUTA tax the company must pay Michigan on Porter's wages, and the net FUTA tax on Porter's wages. Okay, so there's three different calculations being done here. So let's recap what is going on here. Herb is being transferred from the plant in Nebraska to the plant in Michigan. Okay, so still the same company, just a different location, a different plant. Okay, and of course it's two separate states based on the experience ratings for those states. Nebraska is 3.2% and Michigan is 3.8%. Based on the information provided, we have to calculate the SUTA and the FUTA tax. Okay, so the first thing we're going to do is we're going to calculate the SUTA tax that must be paid to Nebraska on Porter's wages. Okay, so this is pretty straightforward because they're telling you here that $2,800 of the earnings were paid in Nebraska. Okay, so the employee earned $20,900. 2,800 of those earnings were paid in Nebraska. Now we know that SUTA is on the first $9,000 that is given to you in the problem. So we are paying SUTA taxes on the first $9,000 of wages. Okay, so I know that the whole $2,800 that were paid in Nebraska are taxable for SUTA tax purposes. Okay, so what I'm going to do is I'm going to get my $2,800 and I'm going to multiply it by my rate for Nebraska. Okay, and my rate in Nebraska is 3.2%. Let me get my calculator out. Okay, and we are doing 2,800 times 3.2%. That gives me $89.60. Okay, I'm going to put that right here. Okay, so this is a calculation that we're doing right there. Okay, 2,800 times 3.2%. Okay, that gave me $89.60. That is how much I owe the state of Nebraska for SUTA taxes for Porter. Okay, now they're asking us to do the same thing, but now for the state of Michigan. Okay, now this is where you have to be careful. We paid SUTA taxes on the first $9,000 of earnings. Okay, so I know that I need to pay taxes on $9,000. I'm going to subtract the $2,800 that were paid to Nebraska. Okay, I don't want to double pay. So I'm going to deduct the amount of wages that were paid to Nebraska so I can calculate how much is taxable for the state of Michigan. Okay, so let's see. That's 9,000. 9,000 is the maximum. That's the base that I'm going to pay. I'm going to pay $9,000. I'm going to subtract the $2,800 that were paid in another state. So that means that for the state of Michigan, I am liable to pay taxes on $6,200. Okay? So that is my taxable wages for pseudo-tax purposes for Michigan. Once I get my $6,200, I can multiply it times my rate in Michigan, which is 3.8%. Okay? And let's see what that gives us. 6,200 times 3.8%. That gives me $235.60. So I'm going to put that right there. So my SUTA for Nebraska is $89.60. My SUTA for Michigan is $235.60. Now they're asking you for the FUTA tax. Now FUTA is on the first $7,000 of earnings, okay? $7,000. So this is stated on your book. FUTA tax has a cap of $7,000. The first $7,000 of earnings for each employee is taxable for FUTA tax purposes. And remember, FUTA is the federal unemployment tax, and that is basically to administer the federal program. Okay, this is not the one that is used to pay out actual benefits. The one that is used to actually pay out actual unemployment benefits is the state unemployment tax. Okay, that is why it's much higher. Okay, so we know that we're going to pay taxes on the first $7,000. And I know I'm going to pay taxes on $7,000 because this employee made $20,900. So they made enough. So I'm going to go from those $20,900, I'm going to pay taxes on the first $7,000 of earnings. And then I'm going to multiply it by my FUTA rate. Okay. Now, if you recall from your textbook and from our last lectures, we know that FUTA is 6%. And then we have a credit issued of 5.4%. So that means that my FUTA tax is 0.6%. Okay, 0.6%. That is my FUTA tax rate. Okay, and let's see what that gives us. Okay, $7,000 times 0.6%. That gives me $42. Okay. So my FUTA tax is $42. Okay. Just remember, on the FUTA section, there's information about the FUTA tax and then the credit that's applied towards it, and then the net FUTA rate, which is what we're using here, okay, which is a 0.6%. Okay, so this is a very straightforward problem. It's just a matter of segregating the earnings for SUTA tax purposes for each of the states. And then, of course, calculating your FUTA tax. Remember, don't get FUTA and SUTA confused. FUTA will always be the first $7,000 of earnings. SUTA may vary by state. Okay, so if it's not provided, then you use 7,000. If you're given the base rate for that state, then use what is provided, because in reality, each state does have their own SUTA tax base. Okay. So that is how we calculate. I've put all of the formulas up there so you can hopefully help you when you're completing your homework problem. So basically that is it for the first exercise that I'll be covering in this lecture. If you have any questions whatsoever, I'm here to assist you. Just make sure that you do include your problem number, your attempted solution step by step, and your specific question or questions, and I will be more than glad to reply back to you. And provide you some guidance as to how to complete or make any corrections to your existing calculations. Okay, I hope all of you have a wonderful rest of your week, and until next time, thank you.